Hello and welcome to the Traders Corner daily market update for the 30th of November 2010. Today the price action in the currency market really has been dominated by the risk-off crowd. The euro continues to go lower as the yields on Spanish bonds widen against the benchmark German Bund. The bailout package for Ireland hasn't really seemed to do much to curb the fears of the markets at the moment. It's just everybody's scared that Spain's going to be the next country that's going to go to the IMF for a bailout, and after Spain, Portugal's going to follow, etc. So the markets aren't convinced that this is going to be the last that you hear of the of the debt issue in the eurozone. So the euro is going to continue to push lower, and that's obviously what it's done today. On top of this, you've also got the increased probability of an interest rate hike from China. China continue to battle with inflations. A few of the tools that they've used so far haven't really helped to curb their inflation. They raised the reserve requirements. That's not done much. They've let the yuan appreciate a little bit so far, and that's also not done much. So now there's noises starting to come out of the markets of interest rate hikes coming out of China, and obviously that's not going to be very good for the global growth. Canadian GDP came out below expectations, which wasn't great for one of the positions that we have on. As you probably know, we've been short Aussie CAD for a few days now. It was looking good yesterday. This number came out and it's pushed the price right back up, but it's still sitting in a little bit of profit there, and we're still confident that price action is going to push this pair lower, but this has just been a slight speed bump in the road. And finally, on the fundamental front, the US continues to print positive data, and that really seems to be helping buoy the US dollar at the moment. I mean, our dollar franc position is sold off quite aggressively this morning in the Asian hours, but has since come back and is pushing the highs of the last couple of days. When we go to look at the charts in the moment, we can see that if we get a break of these highs, we really could be looking for extended moves to the upside. So to summarize on the fundamental front, we've still got issues in the eurozone. They aren't going away yet, so sentiment is still negative. It's still risk-off sentiment. Added to that, we've got the the possibility of an interest rate hike coming out of China, which again isn't going to do much for the risk-on crowd. The risk-off crowd again are going to benefit from that, particularly something like the Aussie dollar, or the Aussie against most of the other majors is going to sell off quite heavily if China do go to increase their interest rates, because they're quite dependent on China to keep them growing and to keep them going in the right direction. So all in all, from a fundamental point of view, it's pretty much been a risk-off day, and any positive data has come out of the US, which has helped push the US dollar higher. So let's go take a look at the charts and see what our positions are saying. Okay, so let's start by taking a look at the dollar franc position, which, as I said, we've had this on for a few days now. As you can see here, the dollar franc came and broke out of the high, indicating a possible trend reversal quite a few days ago now, going back to actually almost 2 weeks ago now. We got in long here. We had to suffer some pain over the next few days as the markets didn't seem to want to break out of this range. It seemed like there was quite a lot of selling pressure over here, but eventually now, after the sell-off this morning, we had a rally, a couple of down days, and this is quite a bullish candle here, with the dollar franc holding quite strong above parity. Doesn't want to go below there. We can see that when the markets did sell off, they sort of quite aggressively down to the 99.18 level, only to push straight back up in the European and US trading session. So this is still quite bullish for us. We're still confident of this position, and we're going to hold on long here. Let's go take a look at the Aussie CAD. As we said, this was the one earlier that really turned around on us. As you can see here, the markets on the back of the negative Canadian GDP figures, the Aussie dollar seemed to rally, or rather, let's say the Canadian, the loonie sold off quite a bit over the past couple of hours. Actually, it's coming back again, and it seems like the break of this previous level, which is where we got short, seems to be quite a strong level, and it looks like this is where things could turn around. I mean, couple that with the fact that the Chinese situation could also affect the Australian dollar, and we think fundamentally as well as technically this is still quite a good trade for us to be in, so we're going to stick around with this one for now. Then coming to our poster chart right now, the euro pound. This is a trade that we love at the moment, both on a technical level and a fundamental level. We looked to get in short on the euro dollar, but we missed that opportunity, but then managed to get this opportunity to take a break of this low here. We actually got short around this level. Again, we had to endure a little bit of pain as immediately we got into the position, it decided to rally. But over the past couple of days, on the back of the issues with the Eurozone and the fears in the Eurozone, obviously this seems to be going lower and is pushing a lot lower, which is great for our position. So we're in this position at the moment. We've got our stop brought up to break even now, so we've locked in quite a fair bit of profit, and we're just going to keep riding this one all the way down. I mean, we anticipate that we should at least come down to the 82 level, which is a previous area of buying, and if we can get past there, we can go down to the 81.50 and then the 80 level, and if we get below 80, then we've really got clear water down to, let's go back in the charts for a second here. If we get below 80, it's a long way down to the next significant level. So a break of this level here, we can be looking at something down to the 78 level, and then if it breaks below there, you never know. I mean, obviously we're not saying that it will go down there, but we're going to ride this until we get the reversal signals at the very least. We're in no hurry to exit this trade right now. We've got quite a nice bit of profit locked in there, so we're just going to continue watching this and continue monitoring it. And finally, our final position that we have on is the Aussie dollar. We got short this pair on the break of this level, so we got short at 97. Again, we've come down a fair few hundred pips, so we've got a nice bit of profit locked in there. And what we're going to do is, again, just keep riding this. We don't anticipate that we'll get a lot of pressure until we get down to this level. At the moment, it's having, it's got a little bit of buying pressure here, which you can see as a previous low for this candle back here. But if it breaks that level, then we can come down to this level, which is pretty important. And if it breaks below there, then you never know, we could be on our way back down to 87. Again, this trade for us is in a few hundred pips worth of profits. We've moved our stop up on that one, so we've pretty much got a freebie trade right here that we can watch all the way down. If it comes back and stops us at a break even, c'est la vie, what can you do? That's the markets. But no, the positions at the moment are looking pretty good, pretty confident of them, but as I said, we're not trying to predict anything here. We'll just see where the price goes and we'll react when it gets down to that. Thank you very much for listening, and we'll see you tomorrow. Take care.